Hello, welcome, and thank you for attending today's UMPIP webinar series, Quarter 3, Accessing Your Accounts When Life Happens. Today we will review loans, withdrawals, distributions, some tax consequences around the when and the how and under what circumstances we can access our accounts at Wespath in the UMPIP. My name is Frank O'Brien. I am a benefits educator with Wespath. And I will be joined today by Bob Christoffel, the Manager of Benefits Education. Bob will actually be working behind the scenes. He will be staffing our question box. And please, we encourage you, and Bob wanted me to encourage you to go forward and ask your questions as they come up. He will do his best to respond to you while we are on this webinar. But we will be sending an email I'll reference momentarily later on, and any questions you have we do not get to, we will make sure we put into that email in a general sense. Also today, our presenters will be Todd Creviston and Cheryl Hatcher. Todd is a benefits educator, and Cheryl has title of Senior Benefits Plan Specialist. That is a title that kind of encompasses a few things for us, and one of them is to be a member of our benefits education team. Today's session will be recorded. This is a quarterly series this year. We're breaking out different topics as we go through the year. So we've made sure we recorded each of the sessions. If you did not make the first session, we have the recording to that. The second, we have the recording to that. And we will send you an email with those 3 recordings, this webinar and the prior 2, so that you can view them at your leisure. Also in that email, we will provide to you information around the 4th quarter UMPIP webinar. And that one we're going to focus in on financial planning in a broad sense. Also, there'll be links to setting up one-on-one benefit consultations, something that Cheryl will get to later on in the presentation. As we begin, we'll start with a brief reminder of Wespath, who we are and what we do, and we'll start that at the bottom. Caring for those who serve by providing investment and benefit services that honor the mission and principles of the United Methodist Church. It is foundational to what we do. It's what that building in that picture is all about. It's why we wake up in the morning. We have been around for a long time, north of 115 years, I believe. We are the largest reporting pension fund in the world. We're a large financial services firm as well as a pension board that focuses on church, clergy, and lay employees. Markets move every day, but we have approximately $29 billion in assets under management. We have over 100,000 participants. That includes all of us here today, clergy, lay employees of our annual conferences, non-conference plan sponsors that provide this UMPIP, surviving spouses, all are embedded within the participant population for Wespath. And we're a not-for-profit organization. There's no stakeholders or shareholders that are getting any assets from us on a regular basis. The important thing there is those dollars stay with us and do what they're intended to do, which is take care of those who serve by providing investment and benefit services that honor the mission and principles of the UMC. Again, this is the 3rd in the quarterly series that we're having this year. In March, we did a general overview of UMPIP. We hit on all the topics you can see there. Then the one in the 2nd quarter, we broke out and focused in on the account types that are available to you, before tax, Roth, etc. And we also did a deeper dive into the investment funds and LifeStage investment management. Today, we are going to focus again on accessing the accounts as life happens, and we're going to get into great detail on some of the information around that. And then in December, as I indicated, there'll be a session that will focus on putting this all together in the context of household financial planning. So today's agenda, Cheryl will just briefly remind us of what we heard in Q1 and Q2, going through what is the UMPIP plan in general, what are the account types and the investment options that are available to you. Will also be handled by Todd Creviston. Todd will walk us through the various loans, withdrawals, and distribution options that we have available to us. And then Cheryl will take us home by reminding us of all the resources that we have that can enhance the participant experience with Wespath. And before I do that, hand off to Cheryl to begin today's presentation, I just wanted to promote to you another webinar that's coming up down the road. It's November 8th and 9th. It's going to encompass 2 days. It's delivered to you. This is the 3rd time we're doing the delivered to you, or DTY. And this is a a program that hits on not just our plans and benefits and programs, but also ties it into the 5 dimensions of well-being. So we'll be putting it in the context of health, physical, social, spiritual dimensions of well-being. So we encourage you to look for the registration links for that, and hopefully you can find some time to hear some of the presentations that will be provided to you and to all of us on those 2 days. And now it is my pleasure to introduce to you Cheryl Hatcher, who will begin our presentation with an overview of UMPIP. Thank you, Cheryl.
Hi, well, thank you, Frank. I appreciate the warm welcome. So as Frank mentioned, I am Cheryl Hatcher. I'm a Senior Benefit Plan Specialist reporting to the Benefit Education Team. So my role today is to give you a little bit more information regarding UMPIP. Now, if you've actually been on the other 2 webinars, then this is going to be review for you. But if this is your first time coming to one of our quarterly webinars, well, welcome. Now I will give you some more information regarding the UMPIP plan. So what is UMPIP? Well, UMPIP is the United Methodist Personal Investment Plan. We do like our acronyms here. But what it is it's a defined contribution 403B plan. So what it is, you've got an account balance for you and your employer contributions. That's money that can be put into your retirement plan. You can actually determine whether you want the investments to be on a moderate or conservative or aggressive type of plan. You've got many different options for this IRS regulated plan. And again, it is something that you decide how you want your money to be allocated throughout the retirement plan. So as far as your contributions for the participant UMPIP plan, your contributions are available immediately. You can actually decide how much you want to contribute, whether that's a percentage amount or a dollar amount, whether it be like maybe 1%, 5%, 10%, or a straight dollar amount coming out of your paycheck, however you get paid, if it's weekly, semi-weekly, semi-monthly. And again, you decide how much to contribute. Again, you only want to be able to put money into your retirement account on what you can afford. We're not asking for you to put in more than that because you do need to survive, but we do want you to think about retirement and how much you need to have in retirement. So again, you decide that amount, what's good for you. You've got 2 ways, and actually you can have that account money invested. You can actually manage it yourself. So again, you decide which plans and how much to go into each plan. Or you can have LifeStage Investment Management actually take care of it for you. Since I'm a member of the UMPIP plan, I actually have LifeStage Investment Management myself. It's one less thing that I have to worry about. I've got other things to be thinking about. So this is something that's nice and easy that I don't have to worry about in order to have my money still grow for me in my retirement. So this is, there's different ways in how you contribute to UMPIP. So there's 3 items on this list I want you to kind of remember here. So you can avoid paying taxes now, or you can avoid paying taxes later, because sometime you have to pay the tax man. So it's either before or after. Or there's another way you can contribute, and that's with rollovers. So I'll go into each of those in just a little bit of detail. So regarding the UMP-Before-Tax, this is going to be the amount of your before-tax contributions that's usually taken from your paycheck. So your contributions and any earnings that you get are tax deferred. So once you take that distribution, then that's when the amount will be taxed. So again, no federal state until you actually receive that disbursement once you retire. Now quickly we can go into the UMPIP. This is one of those Roth contributions for an after tax. So what you do is you would pay taxes now, and then any earnings that you get or the distributions and the earnings are tax-free. So that is something that you want to maybe discuss with your financial planner, or if you don't have one, we've got EY Financial Planning Services. This is something that is paid by the plan itself, so it is free to you to use. So again, we highly encourage you to review EY and if the Roth might be a good option for you as well. Now, just to go over the contribution limits, your before tax and Roth contributions, that's a $19,500 combined limit per year. If you're over age 50, you can actually contribute an extra $6,500. And then total contribution limits, that's including your contributions and then as well as your employer contributions. That's that a higher amount of 58,000 or 6,450. Now, I don't want you to get tied up on the numbers, but what we want you to do is just remember that you can actually change these amounts at any time. If you want to, you put in 5% for the first 6 months, you can do that, and then change it to 10% for the last 6 months of the year, you can do that. So just want to make sure that you're aware that that's something that you can do. Now, as far as if you've exhausted all of your other amounts from the previous slide, just know that you can actually put in more money on an after-tax basis. So that's kind of a last type of option for you, but just want to let you know that that's also an option for you. Now, the last thing we have is rollovers. So what is a rollover? So rollovers are any type of money that you have from a previous employer plan of money that you want to come over to UMPIP. For example, this is money that's portable. So I've actually been a couple of places in my former life. I've worked at other jobs, and I've had 401k plans through them. So I actually, when I got here at Wespath, I didn't want to have to look up all 3 different places in order to see what my balances were. So what I did was I rolled that money over from the 2 different places, jobs I had, roll it over here to Wespath, and so now I only have one place that's that I can look at my money, and it just is more convenient for me. And plus I have LifeStage to actually manage that money for me. Now regarding the rollovers, they do need to be from IRS qualified plans, which is usually the traditional IRAs, or they can be something that's not a 403b plan, or I'm sorry, not a Roth plan. But you can give me a call. I'm the one who actually takes care of the rollovers, so you can always give me a call or contact me, and I can get the forms out to you if you have any rollover questions, or if you need to roll something over to us. All right, now I want to hand the baton off to Todd Creviston, our benefit educator, who is going to take us the next step as far as the investment options. So here you go, Todd.
Thank you, Cheryl. Good afternoon, everyone. My name is Todd Creviston, as Cheryl alluded to. I'm a benefit educator here at Wespath. I've been here since April of 2012. We'll cover today, start off with the benefit options. The Q2 webinar that we presented back in June actually covered this section in more detail. So we'll just breeze through this section. So Wespath invests in sustainable investing. All the investment upholds the values of the United Methodist Church. You'll have very diversified investment options from bonds and stocks and growth and income funds. We offer, the funds offer competitive returns relative to benchmark, and there are no commissions or sales fees, so that helps with the low expense ratios. And at the bottom there you see LifeStage Investment Management. That places your account on autopilot, and I have more information about that later today. We are very proud of this. The Sustainable Investment Report just came out. You can actually scan that QRF symbol on the right and pull up that report. I'll give you a moment to do that. You can also find that on wespath.org. There is no shortage of information at Wespath. You can go to wespath.org, find the daily values for all the different funds that you are in, as well as fund descriptions, comparative results, benchmarks, fees. You can actually look at all of the different stocks that the international and the U.S. equity fund is invested in. Be careful. Don't print that document. I made a mistake, and it turned out to be about 40 to 45 pages. So very large, very diverse. More on that in a little bit. So now we'll just cover this real quick. There's a deeper dive on this section on the June Q2 webinar as well. We like to just call out the type of fund, the name of the fund category, and then the goal for each of those funds. Because if you understand the goal, you'll understand what they're invested in. So the Capital Preservation Fund, the name of the fund is actually stable value. The goal here is safety. Think of this as your money market account or as your bank account. These are also in order from conservative to more aggressive. You'll also see them listed like this on your quarterly statement. The next category of funds are income funds or bond funds. The goal of this fund is these funds is to pay you a higher level of monthly income that you'll receive in retirement than you would get from the stable value funds. You'll see that there's 3 actually listed here, and those are also in order from conservative to more aggressive. The next category is called balanced funds. This is made up of stocks and bonds. So the goal here is growth from stocks and income from bonds. So it's actually serving 2 masters or moving toward serving 2 goals. And you'll see that this is actually made up of the different Wespath funds. The last category on this slide are equity funds, and you'll see that there's 2 available, the U.S. Equity Fund and the International Equity Fund. These are very, very large funds. They're also very diversified, including investments in large, medium, and small companies. And the U.S. Equity is, they invest in companies inside the U.S. The International Equity Fund invests in companies outside of the U.S. The goal with the equity funds or the stock funds is growth, long-term growth. The last category of funds is the Social Values Choice Suite of funds, and this is for participants with a heightened focus on a company's environmental and social performance. These funds also take into account provisions passed at annual conference, and these funds are only available if you self-manage. That means that you would actually select your funds in those allocations. This is a graphic representation of what I just went through in about the last 2 minutes. You'll see on the right-hand side is return, and then along the bottom you'll see risk. And when we talk about return with investments, we talk about the possibility of the value, the balance or the value increasing. When we talk about risk, that's the chances of or the possibility of the balance decreasing or the value decreasing. So down in the left-hand corner there, you'll see stable value. The goal there is safety. As we progress up, it moves from safety to growth. And then one of the hallmarks of investing is the greater the risk that you're willing to accept, the greater the potential return. Over time, stocks have returned a higher rate of return or reward, but on any given day, there could be a blip. So there's essentially 3 ways to select your funds, and your contributions would be made to your Wespath funds from your paycheck. So you could choose your own investment funds. That works for some people. We call that self-managed. So that means they select their funds and they determine their allocation of those of your contributions. That works for some folks. Not everybody. Some folks actually do the middle section there. They actually consult with EY, and EY can help determine that asset allocation. And then on the left-hand side there, I think Cheryl mentioned a little bit ago that she was in LifeStage Investment Management. I am too. I was thrilled to see that was available when I started here at Wespath almost 10 years ago. About 80%, I've been told, of the individuals in UMPIP are actually using LifeStage Investment Management, so you'd be in good company. Briefly, what LifeStage Investment Management does, it personalizes your investment, it personalizes your contribution, your defined contribution accounts. So UMPIP, if you're clergy, that would also be your CRSP DC account. So it sets your account on autopilot because it actually allocates, it selects the funds and then allocates the contributions to those funds by a number of variables, including the age of the participant, For clergy, the expected benefit commencement date for MPP, risk tolerance, are you moderate, are you conservative, are you more aggressive, and then eligibility of Social Security benefits or other Wespath benefits like MPP or Pre-82 for clergy. So now let's talk about account access. So life happens, I think, was part of the title of this presentation. And we all try to save, we're all involved in this program, investing for the future, investing for the ultimate goal of retirement. But sometimes life gets in the way. Sometimes there's some unexpected expenses or situations where you may consider taking a portion of your UMPIP account. And over the next 10 slides or so, we'll go through kind of on a high level on what each of those scenarios look like. We do like to call out that if you access your account early, it may impact your financial security in retirement. Participant Solutions here at Wespath are a wonderful group of folks. They can actually walk you through and help you kind of learn about what some of the consequences or parameters might be for taking that withdrawal. And we also recommend that you seek financial or tax or legal advice to help also understand what those consequences may be. So there's three big buckets on accessing your UMPIP account. The first one is what conditions can you get your UMPIP account before you leave or terminate or before you retire, what it looks like if you separate from service, and then the ultimate goal would be at retirement. So here are the half a dozen ways that you can access your UMPIP account, and we'll talk a little bit more about each of these in detail. So with a hardship loan, you're able to withdraw up to 50% of your vested account balance. That means the maximum loan value can be $50,000 and the minimum is $1,000. If you are pulling the money out to purchase a primary residence, maybe it's a down payment for a primary residence, that loan term can be up to 15 years. If you're pulling it out for any other reason, the loan term is 5 years. Okay? The interest rate is prime plus 2, so currently that's 5.25% interest. That interest that you actually pay on your loan is actually going back into your UMPIP account, so you're essentially paying yourself back. Okay, so that goes back into your account. And you'll pay that by setting up a direct debit with Wespath, and that will come out monthly. If you default, that means that you stop paying the loan back. That becomes a taxable event if you're under the age of 59 and a half. Wespath will send you a 1099-R that lists that amount, that outstanding amount, the outstanding balance as a taxable distribution. And if you default on a loan, it could impact your ability to request a loan and receive a loan in the future. So the next category is a hardship withdrawal. This is something that isn't paid back, and you could take that from after-tax, Roth, or your before-tax contributions. If you've rolled over money into your UMPIP account, like Cheryl talked about, then that amount would need to come out first. So the rollover would come out first. It's also considered taxable income. It's a taxable distribution, and there's a potential IRS penalty for that. The next piece is that you'd actually need to provide proof of that qualifying hardship, and the qualifying hardships are shown here. So unreimbursed medical expenses, funeral, burial expenses. You can see as you look through that list, a lot of these situations are stressful. A lot of these situations are potentially unexpected. So you'd need to provide documentation of each of those. The money that you take out as a hardship withdrawal isn't paid back. I think I mentioned that already. So the next category would be in-service withdrawals. If you have a rollover account, you could take that out at any time. And if you're over the age of 59 and a half, you could take a in-service withdrawal from after tax, from your Roth or before tax balance without penalty, without tax penalty. So if you're in this situation, you're likely already communicating with a couple of groups here at Wespath. To qualify for a disability withdrawal, you'd actually need to satisfy the definition of disability. Our disability group can help you navigate that, as well as the Wespath customer solutions. You'll need to complete and then submit the application for benefits for disability form. And if you qualify, there is no tax penalty if the condition satisfies at least one of the exemptions. The access is actually determined by account type. So plan sponsor account, rollover, after tax, QVEC, which is qualified vested employee contributions. I think I got that right. So if you're in this situation, we recommend that you contact Participant Solutions. Things are difficult enough. We're definitely there to help you take care of that process. So for you do have access for qualified military withdrawals. So our reservists on the phone today, you do have, or you can have, access to your UMPIP account. You need to be on active duty for at least 6 months. You're able to withdraw from your participant contribution account. That means what you've been contributing through your paycheck. You need to submit a copy of the orders, and in this case, you wouldn't have a tax penalty. For active duty military who are on military leave, you need to be at least on military leave for 30 days. Again, you're able to take a distribution from your participant contribution account. You'd need to submit a copy of your orders. There may be a tax penalty in this circumstance, so you'd want to speak with your tax preparer as well. So separation of service. I've got a couple slides on this actually. So separation of service for a clergy person is defined as you're terminating your conference membership. For a lay employee, that means that you're leaving your plan sponsor employment. There's a nuance with the lay employee here. So if you leave your current plan sponsor and go to another plan sponsor, you could only have access to the account balance from your prior employer. You can't have access to your current employer. If you separate, you don't need to if you separate from service, you don't need to take the money with you. You can actually leave it on account if your account balance is greater than $5,000. If it's less, Participant Solutions can help you navigate that. And then you are able to roll over or roll out that balance if you separate from service. Retirement. This is what we're all saving for. This is what we all hope for. The distribution choices include a full lump sum. So let's say your account balance is $100,000. You can take a full lump sum distribution on that. We like to caution you though. We even suggest that you call EY so you understand what the tax consequences might be if you're going to take a full lump sum distribution of your account. A partial lump sum would be maybe I'd like $5,000 or $10,000 to go on a vacation, maybe fix the roof, update the kitchen now that I'm home. I might be cooking more. The next opportunity is cash installments, and that means that you'd receive a monthly contribution or a monthly disbursement to your bank account of choice. So you'd receive that on a monthly basis. The first is self-managed. That's kind of a similar term. We talked about self-managing your investments a couple of slides ago. This is self-managed your retirement income. So you tell Wespath how much money that you'd like to receive on a monthly basis. $1,000, $2,000, $5,000. LifeStage retirement income is the second option. And this, in effect, places your distribution on autopilot. It'll actually calculate a monthly payment for you that's designed to last a lifetime. Because it's an account balance, there's no guarantee, but it does offer excellent probability. The next option would be you could leave it on account until required minimum distribution, or RMD. So if you don't need the money when you're retiring, you don't need to take a distribution. You can actually let it stay invested with Wespath until a future date. Another opportunity that's a really cool opportunity are plan loans in retirement. So you can actually take a loan from UMPIP in retirement and pay that back, just like we talked about a couple of slides ago. And that's not a taxable distribution. So a little more on required minimum distributions. So there's a little IRS language up at the top. So it's, required minimum distributions begin no later than April 1st to the following year after the participant turns 72. Say that 5 times in a row. It's complicated, but if you're in this situation, Wespath will actually help keep track of that for you. Make sure you keep all of your address and your contact information up to date in your benefits access account. But if that's your situation, we will notify you of that. That applies to all of the defined contribution accounts, so UMPIP, CRSP, DC, and the 35% of MPP. The CRSP and the MPP are clergy plans. Once you begin RMDs, you'll need to continue to take RMDs, and the RMD is based off the prior year's balance. For clergy, if you haven't begun taking your other benefits, MPP, CRSP, defined benefit, or pre-82, you'll also need to begin that when you start your RMD. And the IRS has put together a terrific publication, IRS 590. You can actually Google that and find that very quickly from the IRS. A reminder for our clergy. So clergy have the ability to use the housing allowance exclusion in retirement. What it allows you to do is exclude money that you receive from Wespath from taxes in retirement. So it'll be the lesser of these 3 scenarios. You'll need to go through each scenario each year and make a bona fide attempt at documenting each of those situations. You could talk to your tax preparer. EY is also well versed in the clergy housing allowance exclusion and can talk to you about that as well. So now, 1 or 2 slides on LifeStage. So LifeStage retirement income, I mentioned it calculates that monthly payment, calculates it in the safety zone. The goal is for it to adjust each year up, adjust up for inflation. It does offer excellent probability of that lifetime income, but there is no guarantee. And it is possible that it might not get adjusted up based on market conditions. Any account balance remaining upon passing will be transferred to the beneficiaries. And now I'm going to pass it over to Cheryl Hatcher to talk about the participant experience.
All right. Thank you very much, Todd. All right, so I'm going to wrap things up here by talking about the participant experience. So we're going to go through the different items here of the benefit access tools, benefit projections, the benefit readiness tool, which is actually a really great feature. Talk about EY financial planning services again, and of course, we've got tons of additional resources that are out there for you. So for benefits access, if you haven't registered, we do highly encourage you to actually register for this. This is just a little snapshot of what this plan, what this will show you when you actually sign into your account. You've got a summary page, you've got your plan balances, you've got the little pie chart showing all the different amounts that are in each bucket there. So it's a great way to see how much money you have where. And if you want to, you can click on the actual types of plans, and you can see, get more information regarding the actual investments. And on the right-hand side, there's Learn More. So there's a bunch of different questions out there, a lot of frequently asked questions, I should say, so that a lot of people have. So you can click on that and try to get some additional information for your questions. But regarding the investment features and the readiness tool, that readiness tool is actually really nice. It shows you information regarding how much you may have as a gap. So if you're projected to retire in 10 or 15 years and you have expenses and your income, it might show you what that gap could be. So maybe you need to retire later, maybe you just need to make some more money, or of course decrease those expenses. So that tool will actually help with show you that. All right, we have quarterly statements. So the best way to get those is through, they're available online at benefitsaccess.org. So you can actually view those account balances. And if you're in LifeStage investment management, like I am, the information there will show with the transaction details. Or if you self-manage yourself, you'll be able to see those transactions that you've actually completed as well. All right, so I've talked about EY Financial, Todd's talked about EY Financial as well. Here's another slide to represent how great of a program they are. We've been working with EY Financial Services, or they were called Ernst & Young. We've been working with them for over 15 years now. They're, each professional that you talk to, all the conversations are confidential. You talk to them one-on-one. They've got lots of different calculators and resources to be able to help you through any questions you may have, whether that's pertaining to your budget or helping you to control your debt, or even situations like should I lease or buy a vehicle. So a lot of different things that they can actually help you with. Now again, this is a free service to you. The costs for the services are included and paid for by the plan. So please, if you already have one, definitely go ahead and contact EY also. They're another resource for you. Okay, so definitely recommend you to go out to wespath.eynavigate.com or call them at 800-360-2539, and they'll be able to help you with those types of questions. All right, we also have the virtual one-on-one consultations, as Todd had alluded to earlier. This is where you can actually go and get that information to sign up for a consultation. Wespath.org/r/consults. So what you do is you would actually meet with one of our benefit education team. It is a free 30-minute session, and it doesn't just relegate to one. You can have as many as you need, and it's during the course of the whole year. Now, if you're looking closely, the person in the laptop picture, that's actually Todd, who just was speaking. So he's part of the team, so he might be the one to do the consultation, but otherwise we have a group of team that can help you with those. Here's a great slide just giving you all the information regarding the particular information on our resources. So as Todd alluded to, our wonderful team of participant solutions, wespath.org, or you can call them at 800-851-2201. Wonderful team that can help you with any questions you may have. I mentioned Benefits Access, and you can go to the benefitsaccess.org, and you can do online participation or participant account management. Again, view your accounts yourself, run those benefit projections, or do that readiness tool. And again, EY Financial Planning Services. So again, a great slide to take a picture of, so you have all those information in one spot, but we'll be sending out this slide presentation at the end as well. Now, we've listened to both Todd and I for almost 45 minutes here, so here's some action planning and next steps for you. If you haven't already, I hope we've given you enough information to have you enroll in UMPIP. It's a great program for you, the great retirement service for you, so that there's money there when you actually do retire. So again, you can elect your participant contribution amounts, whether that's 1%, $10, whatever the case may be. Whatever you can afford is what you should put in. Again, a little bit growing over time is still better than nothing at the end. You can determine your investment strategy. Again, if that's conservative, moderate, aggressive, you can make that determination yourself. As I already mentioned, you can register for your account at benefitsaccess.org. So again, you can look at these yourself, but again, our Participant Solutions team is always there to help you with any questions you may have. And then also, we've got our consultations with the benefit educators, 30-minute consultations that you can do anytime during the year and for any reason. So definitely check in with them, and they can help you with questions that you have. And of course, we're always here for more topical webinars. Our next quarterly webinar for UMPIP is going to be on December 9th, and it's going to be at 1 p.m. Central Time. So if you haven't, we will get out that information after this as well. So we highly encourage you to register for that one as well. Always good to get additional information regarding your retirement plan. So that concludes our information for today. So on behalf of myself and Todd Creviston, as well as behind the scenes, Bob Christoffel, and further Frank O'Brien, benefit educator who talked to you in the beginning, we are so happy that we were able to give you this information today. And right now, I will open it up to Bob Christoffel, who will be able to go through any questions if there's any that you want to bring up and announce to the group.
Thank you, Cheryl. I have answered all the questions that came in.
Well, wonderful. So again, with that in mind, thank you very much for actually putting questions out there. And we do thank you for joining us today. Take care and have a great day.